Okay, everyone. Before we dive into our main topic, let's briefly touch on what FinTech is. FinTech, short for financial technology, refers to the use of technology to deliver financial services and products to consumers. It's a rapidly growing industry that is changing the way we manage our money. But do you know that FinTech companies like neobanks and robo-advisors have an average fraud rate of roughly 0.3%? That's double the historical rates of credit cards and three times higher than debit cards. Yes, fraud is a significant challenge for fintech companies, and today we are going to dive deep into the issues. We'll look at why fraud is such a big problem in the fintech space, the challenges these companies face in dealing with it, and how traditional anti-fraud mechanisms work. We will also share a real-world story about a fintech fraud case to bring the problem to life. So sit back, relax, and let's get started on our journey to understanding the world of fraud in fintech. Now, let's dive into why fraud is such a big issue in fintech. Companies like Chimes, a digital-first neobank, have become very popular in recent years because of their frictionless sign-up and ease-of-use features. But these same features have also given fraudsters an opening to cause havoc. First-party fraud, where customers exploit the system for their own gain, is a common problem. This includes everything from racking up charges and yanking money out of their accounts before a transaction settles, to illegally collecting unemployment insurance in states where they don't live or work. Fintech providers are also more susceptible to identity theft and account takeovers, where fraudsters gain access to another person's accounts and start spending. Take the case of Shala King, a single mother of four from Tampa, Florida. She woke up one morning to find 62 transactions totaling 744 US dollars from different businesses in India on her child account. Despite her quick actions to report these fraudulent charges, her account was nearly emptied by the next business day. This case highlights the vulnerability of fintech users and the urgent needs for effective fraud prevention measures. It took several weeks for Shaila to recover her funds, during which she faced significant financial stress. Meanwhile, Chen has to bear the cost of the fraudulent transactions and suffer damage to its reputations. Because of these and other cases, fintech companies have a fraud rate that's much higher than traditional banks and credit card companies. And this isn't a problem that is going away. In 2020 alone, identity fraud cost $56 billion in losses across all United States financial services firms. This has led some merchants to begin limiting or even blocking the debit and credit cards being offered by neobanks like Chimes and Cash App. So as you can see, fraud is a major issue for fintech companies. It's a challenge that requires innovative solutions, as traditional anti-fraud mechanisms aren't always effective in this new digital-first landscape. While the industry isn't standing still, we will explore how new technologies and strategies are being developed to combat fraud in the fintech space. Given these challenges with fraud, what solutions are fintech companies exploring? One such solution is Bitcoin, developed by Plaid. Plaid is a financial services firm that provides a suite of application programming interfaces or APIs that help financial institutions and other fintech firms securely connect with users' bank accounts. This includes features like real-time balance verification and instant bank account authentications, which can help prevent fraud by ensuring the legitimacy of transactions and the sufficiency of funds. In June 2023, Plaid has launched an anti-fraud network called Beacon. Beacon is designed to protect fintechs and financial institutions and aims to stop the chain reactions of fraud that occurs when identities are stolen and accounts are compromised. Through a set of APIs, Beacon provides tools that prevent repeat fraud attacks and ensure that businesses and customers are secure in a digital space that has become vulnerable to various fraud attacks over recent years. Beacon is now available to fintechs, financial institutions of all sizes, and the 8,000 plus Plaid Power customers. Beacon has the potential to revolutionize the way fintech companies and financial institutions approach fraud prevention. Beacon aims to stop the chain reactions of fraud that occurs when identity are stolen and accounts are compromised. Again, according to a study by Javelin Strategy and Research, identity fraud affected 40 million US adults in 2022. This is a little over 1 in 10 Americans who are often unaware when their identity information is stolen or abused. It is worth mentioning that Beacon can reduce this number by even a small percentage. It could potentially save millions of dollars and protect countless individuals from the stress and inconvenience of identity fraud. Fraudsters exploit the visibility gaps that exist across digital finance services to defraud not just one app, but use compromised identity information to defraud multiple apps and services, creating a chain reaction. These chain reactions of fraud cause for networks accessible to every fintech and financial services provider to identify compromised identity information across those services and the ecosystem overall. Pledge sits at the center of the multi-sided digital finance ecosystem, spanning banks, credit unions, thousands of leading fintech apps, and millions of consumers. With Bitcoin, Pledge is creating a mechanism to verify if personal identifiable information has been abused, reused, or recycled across platforms. With Bitcoin, Pledge is uniting the ecosystem to share fraud insights across digital finance providers and creates a mechanism to verify if personal identifiable information has been abused, reused, or recycled across platforms as mentioned. Apart from helping stop the fraud chain reactions across the ecosystem, Bitcoin can also help protect those businesses' platform from bad actors using their own identity to commit repeat first-party fraud attacks. Bitcoin is powered by advanced matching and normalization models to help pinpoint duplicate sign-outs within those platforms. Bitcoin offers a powerful tool to mitigate repeat fraud against businesses and protect consumers. By sharing fraud intelligence in real time through a set of APIs, Bitcoin enables businesses to detect if a specific identity has been associated with certain types of fraud on other services or already within their own organizations. This helps businesses to more efficiently and accurately find fraud that is going on in their system and to stop it from having these chain reactions of moving between different fintechs. For consumers, Bitcoin provides a mechanism by which they are able to protect their identities. By curbing the abuse of stolen and manipulated identities, Bitcoin helps to create a safer digital finance ecosystem. The social impacts of Bitcoin are significant as well. By reducing the incidence of fraud in fintech, Bitcoin has the potential to increase trust in digital finance services and transform the fintech landscape. Traditional anti-fraud mechanisms often rely on businesses rebuilding the same anti-fraud mechanism in order to try to catch what is frequently the exact same fraud. This suggests that the effectiveness of traditional anti-fraud mechanism is limited by the individual efforts of businesses. This also means there is a lot of wasted money and there is a lot of wasted time. Skyrocketing levels of fraud enabled by the accelerated adoption of digital commerce and the ever-increasing sophistication of fraudsters have overwhelmed traditional control in recent years. This surge has led to increased fraud losses and damaged customers' experience and trust. Bitcoin, on the other hand, enables real-time secure information sharing across the ecosystem to mitigate repeat fraud against businesses, protect consumers, and create a safer digital finance ecosystem. By enabling the reporting of instances of fraud and facilitating identity screening, Pledge Bitcoin aims to counter three common forms of attack: stolen identity, synthetic, and account takeover fraud. Bitcoin's approach to fraud prevention is revolutionary because it creates a mechanism to verify if personal identifiable information has been abused, reused, or recycled across platforms. There is power in numbers, and together we can help stop the chain reactions of identity fraud. As Bitcoin continues to grow and evolve, it has the potential to become an even more powerful tool in the fight against fraud. By uniting the ecosystem to share fraud insights across digital finance providers and creating a mechanism to verify if personal identifiable information has been abused, reused, or recycled across platforms, Bitcoin can help stop the chain reactions of identity fraud. However, like any new technology, Bitcoin may face challenges as it continues to grow and evolve. Fraudsters are constantly adapting and finding new ways to exploit vulnerabilities in the system. To stay ahead of these threats, Bitcoin will need to continue to innovate and adapt this approach to fraud prevention. In conclusion, Bitcoin represents a promising solution to the persistent problem of fraud in the fintech industry. By leveraging real-time data sharing and collaboration across the ecosystem, it has the potential to significantly reduce fraud rates and protect consumers' financial information. In this video, we have explored the challenges of fraud in fintech, discuss the innovation solutions offered by Bitcoin, and consider its potential impact and challenges. The future of fintech is exciting, and with solutions like Bitcoin, it's also becoming more secure. But what do you think? Will Bitcoin be the beacon of hope that fintech companies need to combat fraud? Or will fraudsters continue to find new ways to exploit the system? Thank you for joining us on this journey through the world of fintech fraud. If you found this video informative and engaging, please like, share it with your friends and colleagues. We also love to hear your thoughts in the comment section below. Remember, the world of fintech is constantly evolving, and staying informed is the best way to navigate it. Until next time, stay curious and keep learning.